So good morning, everyone, officially once again to our weekly broadcast. And this is brought to you by Leo Crowdfunding and also by Property Fortress. So I'm David Johnson. I'm the CEO of Leo Crowdfunding. We're an equity property crowdfunding platform. And my co-host is Mr. John Corey, Property Fortress. I'll let him introduce himself.
Good day, everybody. Welcome for being here, and we're going to have a bit of a fun conversation for 30 minutes.
Yeah, today is going to be another really good, interesting topic with another fantastic guest that we've managed to get on. So we'll let Stefan say a brief hello now, and then we'll be hearing much more from you in a wee while. So welcome on, Stefan.
Thank you, David. Thank you, John. Pleasure to be here, and I hope I can be of some interest to your listeners.
Yeah, there's no doubt. So the topic today, development finance, that's definitely your area of expertise and the time that I've dealt with you and the different calls we've had with clients, etc. So I know you have vast knowledge, vast experience in what is, I think, becoming an increasingly hot topic for developers.
Yeah.
This whole idea of development finance and where can I get money for my project. So yeah, it's going to be very valuable today as we go through it. So first of all, just some update news on our platform. First of all, so I'm delighted once again to inform everyone that we've had another successful project. The Hightown Leys in Banbury, if you remember, was a joint venture between Hitesh, Michelle and Brendan. We had a project webinar about 2 weeks ago, and then Brendan and Hitesh joined our weekly broadcast last week. Well, the maximum target, 88,000, was reached in just over 9 hours from 27 different investors. So, John, this is very much the bread and butter of certainly our platform and some other platforms. Just this equity slice of the capital stack, a very simple single dwelling. I know you're aware of this project, and yeah, once again, the platform delivered.
Yeah, I mean, you have 27 investors who've all pledged. I think it took 9-10 hours from open to close. And yeah, it's a very vanilla project. We'll get into this a little with Stefan when it comes to that. There's debt that's been raised. There's the joint venture team actually that put up a bunch of capital because they bought this in auction, the actual site. And then they're using the crowdfunding to help fund the cash flow between when the work is done and they've spent the money and when the lender will release the money in the next tranche. So it's a rather sort of vanilla structure and quite good for people to get a view on. What's also very interesting is the joint venture. So Hitesh Sridhar has done a few projects on the platform, and then teaming up with Brendan and Michelle. Brendan, he used to work for a long time ago, and it's an opportunity for them to sort of leverage the fact that people know him here on the platform and team management and the project management and all the other skills that they have.
Yeah, and it's always good when it funds in a day. Not all projects, are done in a day. Sometimes it does take us more realistic. That does take a couple of days or even a week or two sometimes. So it is good when people are sort of interested enough, they've done their research, they've read the offer document, and they're happy as soon as it opens to obviously make their investment. So the shareholder agreement is currently been signed off. It should go out, if not today, tomorrow to everyone. So if you are one of the 27 investors on the call today, you will get your shareholder agreement, get a chance to review it, and then we move from there to the drawdown process. So yeah, another successful raise. Always great to report that. Also, I managed for the first time in 15 months to be back on the road again with the whole pandemic that we've had. So it was a bit of a surreal experience, been back on the early morning flight to London Tuesday morning, and then having just a series of meetings more or less back to back for 2 days. So some of the meetings were happy that we took a photograph and able to share it. Top left, obviously, our COO, Tony Alner, joined me in London. Interestingly, it was the first time I actually met Tony in the flesh because he joined about 5 months ago. And of course, it's all been virtual. So it was good to meet Tony. Over here is Jules Scott Reed, who's one of the very first registered, I think within the first 10 registered investors on the platform. He's an accountant, He does other accountancy work for developers, and I knew him pre the platform, and he's been one of our longest investors, and he's invested in numerous deals, and it was good to tie up with Jules again. This is Hitesh down the bottom, who just had the successful raise. So we were sorting out some of the post-raise admin, and he's also got some other raises that he's preparing to bring to the platform. So again, it was good to actually meet Hitesh for the first time. And on the right, blacked out for now, because this is a special announcement that will be coming in due course of someone. So I'll say no more about that now, but that just whets the appetite for that one. So before we get into to Stefan and the real deep dive into the development funding, usually our quick market overview is always good just to kind of keep the main things that are happening out there. So I noticed this, guys, that the Dorset home buyers were facing council land search delays. I don't know if this is just in Dorset. I don't know, Steph, maybe you're more aware of, is this something that's happening throughout England? Are these delays pretty typical?
Yeah, we're seeing delays on searches. We're also seeing delays with planning applications, with permitted development applications, with change of use applications. The deadlines are set, but at the moment we're not really we'll take them all with a pinch of salt. So anyone who's looking at planning applications and searches, just be cautious. I'll pick up on it, but one of the benefits of some of the finance, particularly if you use bridging where you're buying at auction, is that lenders will use something called title indemnity insurance, which effectively negates the need for searches, which is how, even if there are delays being faced on some purchases, if you need to buy through auction, there are mechanisms by which you can do that.
Okay. And John, it's that's something we talk about regularly on the broadcast. Whatever changes come to the market, there's always cause and effect. So there was, the whole stamp duty and everything that fell out of that. But the market being hot, the increase in people trying to do deals, and now obviously it leads to a situation where delays are faced, and again that can have a negative impact then on the market.
Yeah, I mean, if you read what's right there on the screen, this is obviously a local council problem, but it's possibly happening somewhere else because it's too many people all asking for information at the same time, and there's not enough staff to get through it all. It's interesting, Stefan brings up what I call title insurance. That this is the standard way in the US to buy a property. You don't have searches, you have title insurance. So every transaction is title insurance in the US. It's almost, you'd have to go out of your way not to use title insurance.
Interesting. Different markets. So the other one that was picked for me this week was the increased financing or the increase in finance options for SME developers is set to boost house building. So I suppose there was Boris's build, but developers can't build unless they have finance. So there certainly has been an increased focus in this whole area of development finance, and that's really the main topic of the conversation for today. So John, any overarching comments on this article before we dive in with Stefan?
So I don't know the article, but it's interesting. If you get a lot of people coming into the market, does that mean that they're going to sort of drive the price down? They're going to be offering more flexible terms. Sometimes then you get an overreaction and you underprice, or you open it up to opportunities that most of the time you shouldn't have done, and so the pendulum swings back the other way. So.
And what's your sort of high level take on that, Stefan? This article like this, that there's just this increasing focus. So you're obviously seeing that this is your game. So lots of new players coming to the market, or new offers being made by existing players.
In terms of lenders, yeah, we'll get into that. I think that a bit later, but there are, I mean, what, nearly 100 or over 100 development finance and bridging lenders. So there's lots of different lenders who all have very different specialties. Fundamentally, if you're a developer, you'll know you can never have too much money. So the more efficient you can be with raising your money from the banks, the further you're able to spread your equity or utilize people like yourselves for equity and get through the deals. It's all about finding the right debt, though, for the right client and the right project. And that really is the art of broking effectively, and what I do.
So on that, that's a perfect lead-in slide to our special guest and special topic today. So do you want to just explain a little bit about your background, Stefan?
Yes, so I'm a co-founder of Willow Capital, which, as I mentioned, is a specialist property brokerage. We specialize in all finance that's effectively unregulated. So we don't do primary purchases or buy-to-lets, but we cover everything from bridging, development finance, refurb finance, mezzanine finance, and equity, which you specialize in yourselves. Now, my background is I used to work in the city, so I've worked on the finance side, but I also was a developer for about 5-6 years. So personally, I've built new build houses, barn conversions, house refurbs, flat conversions. I've been through the mill on that. So one of our biggest USPs is that we understand financing from both sides of the coin. So we understand what the banks are looking for, but we also understand all of the hoops that developers have to jump through, which are fairly excessive, and I'm sure the developers will attest to that. But having personally done it, we know what to look out for. We know how to appraise deals. We know what might trip you up, and therefore we're constantly looking out for that. So that's what we do. We try and offer a kind of a quite boutique-y, unique service. We're not a mass marketed kind of brokerage, and try and just put the clients at the heart of everything we do.
Okay, I mean, I like the fact that you've been on both sides. I think that's very important to the service you offer. That you've been on the banking side, finance side, but you've also been on the developer side, someone coming looking for finance. So if you want to just go through your kind of high level, not to say USPs, but the key things about who you are and how you approach what is a very competitive market.
Yeah, I think most of this I covered when I spoke. I think the keys to what we do is, like I alluded to before, there's probably nearly 100 or over 100 lenders. Now, we have a spreadsheet that details every lender, every set of terms, what their likes are, what the dislikes are. So we have a really good foundation and understanding of what lenders like to do. There are some very, very good brokers out there, but there are also some brokers who will only work with 5 or 6 lenders. And therefore, you're not always certain whether you're getting full access to the market. So having your finger on the pulse with what lenders are offering and who the lenders are is important. So we do that. We spend a lot of time with our clients understanding their needs and their situation. We don't just churn through applications, and we support them the whole way through the life cycle. So it's not just about getting you terms and introducing you to a bank. That's step one. Then you've got valuation reports, monitoring surveyor reports, legals, completion. So we go through the lifetime cycle of the deal. And obviously we don't take any fees or get paid until completion. So if for any reason anything falls out of bed, you don't get silly charges. And wherever we can, we try not to charge broker fees, which if you understand bridging, there's usually an arrangement fee. So if the lenders are paying us, we will never take a separate fee from our client as well. So we're about building long-term relationships, not trying to make a quick buck on each deal.
Okay, no, that definitely, I think, is a good approach to the market. So some of the key things you wanted to discuss today and deep dive into. How would you class, or how would you define or describe the current state of play in the unregulated property debt market? I suppose that's really post-COVID almost is the way of defining that.
Well, yeah, but I think to put it in perspective, you have to go back to March last year, which was when COVID happened, and understand where the market was at that point. So I remember 3 weeks before lockdown, the banks were like, keep sending us deals, we're still lending, everything's fine. And then suddenly lockdown hit. And there was a bit of a panic because no one had ever dealt with anything like this. So they didn't know how to react. So what you saw, what lenders were concerned about was prices falling and property values falling. So in order to insulate themselves from that, they then decided to reduce their lending or their gearing. So if they were at 75%, they might have dropped to 70, 65. I mean, we saw some lenders at 55, and some lenders, due to their funding lines, just paused funding whatsoever. So in classic economics, what then happened was the supply of lending restricted, so the price of lending increased. There's less lenders lending, those who continued lending up to their pricing. So that continued throughout 2020 until I'd say around August, September time, where people started getting more comfortable. We understood more about how we were dealing with it. Vaccine talk was on the horizon. And since then and throughout 2021, we've seen the market and the lenders open up. Now, my view is that we're probably at around 90% of where we were pre-COVID now. So if I give you an example, in April last year, I was trying to source terms for just a bridge for a house that was finished, and the client wanted 75%. We couldn't get it from any lender but one. Pre-COVID, we could have got it from 20 lenders. We're now back in a position where we can probably get it from 20 lenders because the lenders are back at that level of gearing. The pricing is probably slightly more than we were pre-COVID, but as the lenders are getting more competitive, we are seeing the pricing coming down. And the same story is similar with development finance. So their gearing reduced. We're now seeing that increase and more lenders willing to stretch their loans that little bit further. Obviously, the further a bank stretches their development loan, the less equity that's required. So we are in a much better place now than we were this time last year. I think we've still got a little bit of a way to go potentially, but we still need to have an element of cautiousness in the market. I think COVID isn't over. It's going to be with us for a while. And there are other external factors to consider as well.
What's interesting, John, is that, we started these broadcasts last March, and I used to always talk about this crystal ball we all talk about, but you were right from the first week. You were like, look, this is a very small sort of point in history. We've had crises before, and don't get too sucked in by the massive changes in the market. And you were sort of championing that right from the first week. And here we are 15 months later, where Stefan's confirmed we're more or less back almost where we were pre-COVID in some respects.
Yeah, I mean, it's hard to predict anything like this because you could actually talk about viruses, and yes, Gates and others had said, hey, and government agencies even said these things happen. When it comes to the economics of the property market, most people aren't used to anything like this, so therefore it goes completely off the track. And as Stefan said, lenders pull back, or they don't want to pull back, but their lines of credit are pulled and all the rest of it. And then the dust settles and people are like, oh, I still need to live somewhere and all the rest of it. So yeah, it's a wild ride, but we'll come out the other side. The biggest thing I used to say, it's a bit rude or in your face, but the virus isn't actually killing that many people in the big aggregate. It's tragic when it happens to someone's family, but ultimately when it comes to supply demand of housing, we still need pretty much the same number of houses we needed. We're still not able to build enough. So there's still the fundamental dynamics going on of like, people need houses, people want to build houses, people want to buy houses, and we need finance for all the above.
Yeah, no, that's a good point. So what Stefan, our lenders looking for from borrowers? So we would have some fundraisers on the call today, and obviously others will watch the recording. So what are lenders really looking for, sort of in brief, and the pitfalls and barriers they should be aware of?
Yeah, so I thought about this because there's a couple of points. So fundamentally, like I said, there's near enough 100 odd lenders out there. So I typically say to clients, more often or not, we can usually get financing for almost any client on almost any project in almost any situation. The key there is understanding which the right lender is under what circumstance. And then it comes down to what level of gearing can you get and how much are you willing to pay for it. So there's always a way, and we try our best to find a way to make a deal work under most circumstances. And we have worked under a number of challenging circumstances, whether it be the leverage a client needs or the location of a property or their experience, etc. But fundamentally, there are a few common themes that we see that can cause deals to fall over or run into challenges. So one is definitely relevant experience. So where banks, and this is particularly post-COVID, they like to see clients having similar experience to what they're currently pitching for. So it's fine if we can show a natural progression. So you go from house refurbs to a flat refurb or a small office to resi refurb into new building, and you tell a story through that. If you have a client who's only refurbed one flat and then suddenly wants to build 20, that's quite a significant jump. And what you then need to look at is, okay, what else can we do with this? Is there a really strong team around them? Is there anyone else who can come onto the company? So there are points we can consider there. Another common thread is when you see clients go from smaller projects to bigger projects, they don't understand sometimes the other intricacies of what development finance entails. So one of them is personal guarantees. So larger development loans, unlike bridging, require means-tested personal guarantees. So you have to have a certain net asset base to support the development loan that you are taking on. So often, sometimes we can see clients want to do much bigger projects, but don't have the means to do so. Again, there are certain things you can do to get around that, but it's a common theme that sometimes people don't think of. Another thread is unfortunately just incorrect assumptions. So either clients are over-egging their GDVs or under-egging their build costs. Now, be under no illusion, banks interrogate your deals very, very rigorously. You have an external valuer who comes in to assess the GDV. You have an external monitoring surveyor to come in and assess your build costs. So you want to make sure that all of your assumptions are as solid and as built on understanding and evidence as much as you can, because you'll need to justify your positions to the banks. So typically, if we get through credit and everyone's happy with the deal, usually the biggest barrier then is getting through the valuation report. And through COVID, valuation reports were a bit of a nightmare because no one knew the value of any property. Everyone was, I don't have a clue where this is going. We're in a weird position now where property prices are skyrocketing and banks and their valuers are almost trying to be a little bit more cautious, but providing you've got fairly solid assumptions on your valuation, most of ours recently have been fine. And then it's about having the right team around you. So, I mean, we mentioned searches earlier, but the biggest, this hasn't caused deals to fall down, but it's caused deals to be massively delayed. And that's just solicitors over the last 6 months have been so overwhelmed with work. It's not just councils on searches and councils on planning applications. There's been a bottleneck in the whole system with the amount of transactions, but solicitors particularly have been hugely overwhelmed, and that has slowed down a lot of our cases. So if you do need a case to move fairly quickly, or you do need, if you've got quite a complicated case, so anything that you guys do where you've got external equity, needs someone specialist, we do other joint ventures with landowners for clients, anything where it becomes a bit more specialist, make sure you've got a solicitor who understands that like the back of the hand. A simple residential conveyancing solicitor may not have the appropriate experience.
Yeah, I like the fact that where a project comes to our platform, for instance, and has indicative terms from a lender in place, as you say, the amount of scrutiny that lenders will put into analysing a deal before they give indicative terms gives us a degree of comfort that you know, this is a solid deal with a solid team behind it. And I do also concur with your comments about the legals. We have certainly, even in getting shareholder agreements, which were normally a 48-hour, 3-day turnaround, literally are in some cases taking 7, 8, 9, 10 days. Solicitors do seem to be completely overrun. I forgot to say, and I do keep forgetting to say this at the start, week in, week out, but of course, if anyone has any questions or anyone wants to make any comments, you can of course put your comments or questions into the Q&A. We don't use the chat box for this, but by all means, good to hear some feedback, or if anyone's got a specific question for Stefan in the time we've left, we'll certainly put it to him. So the last one question here is, why is it important to fully research your debt options for each project? And Stefan, we'll let you cover that. And then John, if you want to sort of wrap this up in terms of debt and the capital stack, etc., you have an opportunity to do so. So yeah, so why is it important, Stefan, to sort of fully research your options?
I mean, there are a number of reasons why, but I think I was on the tube the other day when I was thinking about these questions, and I saw an analogy for Fever Tree gin and tonic for the tonic element, and they say if 75% of your glass is the tonic, more effort should go into the tonic. And for me, it's similar with the bank financing. The bank financing are funding 75% of your purchase or 90% of the costs on your development. So you want to make sure that you're with a lender who's supportive, easy to work with, likes the deal, has the best terms for you. And sometimes it can be taken as a given that a bank will just give you money, but there are so many banks and so many lenders. How do you know that this is the right lender? And for me, you need to go to someone, either myself or someone else. There are plenty of other good brokers out there, but who work with these lenders day in and day out, have completed countless cases with them, and can validate and justify how they are to work with through a process. Because development finance and all property deals, there's an element of stress and pressure in them. So that's important. You've also got the fact that because there are so many lenders and different products, there are different ways to fund the same deal. So you may look at it one way. We may actually say, well, look, there's this product on the market now. Have you thought about this? Because it could be more cost effective or quicker, or de-risk the deal in certain ways. And another reason, and we touched on this previously, but since COVID, the lenders have gone up, down, they're back up. Different lenders are coming up at different stages. Lenders who were great before COVID have come back a lot slower and may now not be as competitive. And we still have bulletin emails every day of this lender has now changed this term, this lender has now changed that term. So for us who do this as a full-time job, it's tough to stay on top of what's going on and who is the best lender. So for clients whose main job is to build and find sites, I'd be surprised if they can stay on top of the lending market. So come to someone whose job it is to specialize in that. And a good broker, in my personal view, should one almost be an extension of your team. Not someone who you employ, but a finance specialist who you can go to with any questions at any time about any deal, not just once you've got it in application. And also someone who is going to take the time to review and understand your deals. And I do this for you, David, on some of your cases where we really go through and interrogate the position, interrogate the model, make sure everything's going to stack, so that when it goes to a lender, you come across as professional. There aren't any silly errors in there. Because from our side, if I know this sounds a little bit selfish, but if we don't get paid until the deal completes, we don't want to be involved in deals that are going to last 4 months that aren't then going to complete. So
yeah, that's fair.
That's why we put in a lot of time and effort up front with our clients. So there's a lot of reasons why you should research your debt options. And fundamentally, I do have some clients who have just stayed with the same 1 or 2 lenders for years because it's easy. And pre-COVID, there was a fair amount of there was a lot of similarity between the lenders. Post-COVID, the lenders have all basically gone through the mill and have all come out in different positions on where they are in the market. So any pre-existing COVID relationships, some of them that lenders still may be great, but they may now as well not possibly be offering the best terms. So
okay. Yeah, no, that's really, really useful. I think a very insightful update to where the market's at. So John, any wrap-up comments on sort of this topic?
I think more broadly, Stefan's point with the fever tree ad is really good. If 75% is the debt and 25 is the equity or your own cash or whatever you want to call it, why do you spend so little time looking at the 75? And while people always ask about what's the best rate you can get, is it actually the best product to be using for the project? So having someone that knows the market that can help you on that element, in the book that I read, Who Not How, find people who are good at this, let them sort that out. But that's such a big chunk of the overall stack that if you're getting that part wrong, the whole rest of the deal is going to be a bit of a problem.
Yeah, no, that's a really good point. So, okay, so 2 quick points to make on this before we head to the close. First of all, there are Stefan's details. So any of the fundraisers on the webinar today, you can reach out to Stefan. He's more than happy to have a call with you and give you whatever support and help he can. We obviously, it's a question that we get a lot on the platform. People asking us, can they put us in touch with those that can source them the right, as John pointed out, not just the best rate, but the most appropriate lending product for them. So there's Stefan's details. You can grab it there, phone shot, screenshot, whatever you want to do there. And you'll be happy to take calls on that. The other thing which is very interesting and delighted to be able to point out is that Stefan has joined our new project committee. So when fundraisers submit a deal to us for our appraisal as to whether it's suitable for the platform, Tony Allner, this is something that he introduced as the new COO. So we now have effectively a panel of Tony, myself, sometimes one of the advisory board members, and then now Stefan, who's external from the company, but he provides, as you've heard, a wealth of knowledge into this sphere. So we literally send out the details, and then we meet at usually 2 o'clock on a Friday, and we assess the deals. And again, it's been very valuable, Stefan, getting your input into some of the deals that we're assessing currently. You've got kind of a laser focus on where the problems in the application might be. Which is very, very useful. So yeah, you're happy to take calls from fundraisers and engage. Do you do like a 20-minute call initially with people just to sound things out, or what's your normal engagement sort of process?
It starts out at 20 minutes. It usually ends up at an hour and 20 minutes. But we don't mind that. Often, the earlier we learn about a deal and can understand the deal, the earlier we can help shape where it needs to go or give you some feedback. So we don't mind if people are just at the stage of appraising a deal or have just put an offer in and say, look, we're about to put an offer in on this. Does this stack? Can we get the right level of lending? That's fine. It's much better asking us before you put your offer in, rather than coming to us going, oh, we've got our offer accepted. Can you get us this? And I have to go, no, because you're then a bit too far down the track. So yeah, more than happy to take any calls that people would like. Just drop me an email or a text message or call my mobile.
Brilliant, that's no problem. And we'll mention your details again next week as well. We'll do the project committee. Okay, so just a 30-second wrap up then. So we have a new team member who has joined Leo Crowdfunding, and he is going to be the special guest next week. And we're going to update on some of the changes within our structure. I've already alluded there to the project committee, which we'll mention more about next week. But we'll also introduce our new team member, which we're very excited about having on board, and adds another whole service level to what we're doing, particularly on the investor side. In terms of coming soon, we're getting ready to launch the Bridge Road Kingswood project in Bristol. So it is still in preparation. A number of other deals are currently been signed off and approved. We've got a couple of deals happening right now behind the curtain. So it really has been a very intense couple of weeks for the team. And CITYGATE house in Leicester, this will be launched live for investment next Thursday. So next Thursday noon, this raise will reopen. So this was a raise that we did. We had successfully reached the minimum of 400,000 back in about, I think it was end of March, early April. However, the timing wasn't just working in terms of drawdown of funds. So the fundraiser sourced his own short-term lending to complete the project or to complete the purchase. and now he's coming back to the crowd effectively to replace his short-term lending. So the internal strip out, I was talking to VJ yesterday, the internal strip out is complete, and the team is now ready to start the refurb of the building. So there's been a lot of good progress, and this will go live for investment again next Thursday. We're not on Clubhouse again today. Obviously, I've been in London for a few days, and there's just so much that needs to be caught up on. So we're going to take a break from Clubhouse this week, probably back on again next week, but we'll keep you informed. And of course, if anyone wants to reach out to John or myself, you can get John on LinkedIn or on Facebook, and my details are there. So feel free to reach out to either of us, and we do provide sort of an initial call if anyone wants to ask anything specific, or if there's some consultancy required, particularly on things like deal structuring, which is John's expertise, compliance, right through to preparing case studies for our platform, etc. Then you can reach out to us there. So that is it for this week. Again, another very informative broadcast. Thanks everyone who's joined. It'll be on YouTube in about half an hour. You'll be able to go back and listen to some of the things that Stefan covered. So thank you, Stefan, for joining us today.
A pleasure. Thank you for having me.
Yeah, really very useful. And John, once again, thank you for your time and getting out of bed at such an early hour in the US of A.
Whatever it is.
You can go and enjoy the sunshine. So there, everyone, stay safe. And rather than staying safe, I think today I have to add, put on sun cream, not just stay safe. Get the sun cream on if you're out and about. All right. All the best, everyone. Talk to you again next week. Bye-bye now.
Bye.